Oh, wonderful. Happy Monday, everybody. Steve, you
Hello,
with me?
I am with you,
Hello, Steve.
mind and spirit.
A good Monday to you, sir, as well.
Mm-hmm. Yes, sir.
Boy, what a difference a weekend makes. All right.
Charge.
So, yes, indeed. Yes, indeed. So, everybody, thanks for taking the time to pop in and hear what we have to say today. September is almost behind us, as oddly as that seems. Here we are at the 19th already. Seems like the month just started not too long ago. So we've got some good stuff in store for you today. Lots of interesting things, to say the least. But before we get going here, just want to take care of the lawyer speak. Just want to make sure that everybody is aware that we are a publisher of information. So everything we're sharing with you here today is strictly for educational purposes only. If you do need advice on investing or trading or anything of that nature, there are licensed people that can help you out with that. And they're pretty easy to find by calling any major brokerage house. So if you need that type of service, please seek out the right representative. And everything that we share here today, strictly for educational purposes. All right. Taking a quick look at the itinerary today, as always, we're going to let Steve do his magic with the market recap. And then, of course, the next item on the agenda, the Holly recap. Wow, what a day. Some of the best trades, some of the biggest gainers that we've ever seen, in particular, one, which we'll get to. Also had a little technical snafu today, which anybody watching Holly probably already aware of, so we'll talk about that as well. Then we're going to revisit the limit alerts that Steve and I farmed out to you guys last week because, well, BLUE, that says it all right there. And then towards the end of the webinar, we will get to setting some new price alerts. So Steve, how about I flip it over to you?
Yes, okay.
And you can give us the once-over with the S&P.
Sure, why not?
And I think we're going to take a look at a different index as well today.
Yeah, why not? Just to try and mix things up a little bit and get the bigger picture. So here's the SPY with our new lines that we drew up last Monday night. If you recall, we were going back and forth between this channel for the most part, but we broke down and failed hard through the support we needed. It was a gap through, a plunge through the secondary, and a close through that third support. And we just been banging along down here at this 212 in the SPY, that is 212.50-ish level. I believe both of those wicks are 212.50, and then the low of that wick is also 212.57. So the 212.50-ish area is really the line in the sand right now. And I thought I had deleted these. I'm going to do that. I'm going to take off my crosshairs and try and mark up some new stuff here because I know I deleted these before and I just don't think I hit save. So that line is still very much relevant. Now, what we got going here, we don't have moving averages. We're having them soon for those that are waiting with bated breath. They are coming very soon. And the moving averages are a very simple technical indicator to kind of show us they're all rolling and crossing over. And these highs right here have not really been able to pierce the moving averages. We have a big event this market is waiting for, which is the Wednesday FOMC meeting. Are we going to raise rates again in September? So that seems to be, in my opinion, what this market is waiting for. We broke last week on some opinions and then some dovish opinions and back and forth. So we're creating paint ourselves into a corner scenario here with the 212.50 and the SPY being our low end. And we've tested it about 3 times now. I don't like to predict, but I'm going to tell you, I bet tomorrow is going to be something similar where we maybe test close to the low end of this range and we don't really get much higher than we did today, and we kind of continue this little downward compression triangle that we're working on. And then Wednesday, halfway through the day, we're going to have a huge catalyst. You're going to see some volatility probably explode. So this whole thing, this whole drop, tuck and roll, whatever you want to call it, drop and paint yourself into a corner scenario here, really is, I think, a precursor leading up to Wednesday's catalyst of what is the market going to do with rates. So I wouldn't be surprised to see tomorrow just a continued range that we've had today, nothing higher than today's range, and not a break of this low It may take actual raising of rates and some sort of a catalyst to actually break and close below this low. So let's talk about that. I mean, even if we do break and close below that low, where might that next level of support be? Well, on Wednesday, I marked it up right here at the bottom end of this red candle, which is technically the closing of the gap of this close from that candle to the void up here to the bottom low. That could be level number one. Level number two could very well be, down here in these gaps as well, worst case scenario. Or the market does what it's continued to do and likes what it hears from the Fed, and all this was just yet another big scare and a line in the sand drawn at 212.50, and maybe we go higher. But here, the point, the takeaway is we're wedging ourselves into a corner, into a coiled spring, and I believe Wednesday is going to be the catalyst as to what that coiled spring does. Now, we've just been focusing on the S&P, which has some different makeup here. There's a lot of financials in here and banks, and that's the way that market looks right now. But if we go to the Qs, which really technically, is more technology, and that's been leading us. The Qs have not been able to break out of their top triple level here, and they even got real close today. But I just want to pull this up to remind you guys that not every single chart, I mean, the Dow looks very similar to the S&Ps, the Russell, the IWM's been beaten up a little bit, but these Qs, they're hanging tough. So if we do move higher, it's going to be through the leadership of the Qs, obviously, with technology and the way this is going. So just wanted to highlight that every week, yes, we do come in here and try and talk about the broadest base market that we can. That would be the S&P 500, and then using the SPY as our vehicle here, ETF. But don't lose sight of some of the other indexes, which are more tech weighted. And this is showing an interesting picture. So keep an eye on the Qs. They seem to have been leading us and holding us up the last couple of days, but we'll see what Wednesday's catalyst of Federal Open Market Committee decisions decide to actually do to the price in the sand that's been coiling. You want to add anything there, Mr. Jamie?
So basically what you're saying is until Yellen is done yelling, we don't know where we're going, right, until after Wednesday.
That's right.
And that makes a lot of sense. And then, of course, with the Qs, as markets evolve and change, leading indicators also evolve and change. So, I think you're right on the money with the Qs because technology is what's driving us, and that very well could be a leading indicator.
They had a bad break, just like the S&P and everything else, but they were bought back, but they haven't been slammed back down. They've been gravitating higher. So very, very interesting to note. Big asterisk on that today. Just wanted to point that out in the market.
Yeah, that's a very keen observation. I tend to agree with that, Steve, because technology is where it's at. It is the leading sector, and that's where all the exciting stuff is happening right now. Of course, the AI gets folded into that sector as well. We all know how that's working.
Interesting you brought that up. Don't you have something to maybe share on that? Let me send it back to you there.
Sure. So yeah, let's go ahead and hop in here. And before, let's just go ahead and take a look at the chart today. After today's performance, as we can see here, wow, probably the most vertical slope that we've had in Holly's upward momentum. If we look way back here, we kind of had the same thing in reverse when Holly was very, very young. And of course, we were all kind
finger.
It does. And when
somebody snapped it
during this little period right here, we're all kind of just thinking to ourselves, well, so goes the market, so goes Holly. Well, of course, today was that day where she surprised and said, okay, time to head a little bit further north, and boy, she did it in a most dramatic fashion. So what all went on with Holly today? Let's go take a look. And before we move on, I just want to point out this slide right here, all right? And I dropped the link for this article into the chat area already, so feel free to click or archive that link and give it a good read, because it is an article about artificial intelligence and how it's booming, not only in our little niche here, which we were the first people to bring a technology of this nature to the financial markets in the scanning arena, but how artificial intelligence will infiltrate virtually every aspect of everyone's life moving forward in the not so distant future. So give it a read. It's a good read. Ties into what we're going to talk about next, which is how did our AI fare today and all the craziness that ensued. So before we get into the individual trades, we'll just take a look at the strategy panel. Steve, you've got eyes on me, right? I'm coming through loud and clear? Okay, perfect. All right, so as we've talked about in previous webinars, whether it's myself and Steve or Steve and or myself and Andy on Thursdays, I guess the main point here has been seeing things happen that haven't been happening recently, whether that be more shorts showing up into the starting team or simply more strategies. And today is certainly no exception, because looking at the strategy window for today, 15 different strategies, 5 shorts and 10 longs. Now, you know, we've gotten up to 12 in the past, but I definitely think that today was probably one of the more tightly packed starting teams that we've seen in a while. 15 different strategies. And of course, as always, just because they show up doesn't mean they're going to trade. And we can see the trades today column sorting by that column. Out of the 15 that showed up today, only 4 didn't issue a trade, which you know, it's pretty impressive as well. Usually when we have such a big hopper show up, it's usually about 50% of them are going to fire. We had over that ratio today. Of course, these guys up here were the bigger movers, or the bigger producers, 13 and 12 respectively. And then on the short side, only a couple of trades from the power hour short, which after everything was said and done, let's see here, I think we had maybe 27 cents in those trades. So let's do this. Now, before we get into the meat here, just want to take the opportunity to address an issue, and that is anybody that was watching Holly today, up until a certain point, including myself, are sitting here and all of a sudden the Holly screen went blank. And what happened is a server issue, something triggered, caused that field to lose data. We got the programmers on it, they started resurrecting the data, so everything should be fine for tomorrow. But just, you know, what I'll say about that, ladies and gentlemen, is that when you're constantly pushing the envelope with the technology of this nature, issues are going to happen. They're unavoidable. What we can do is work on the decreasing the frequency in which those happen. So our developers are on it, working as we speak to see what caused the problem and get it fixed so that it does not happen in the future. But even before Holly went down, we were seeing some very, very impressive results. And if my memory serves me correct, Steve, correct me if I'm wrong, right before Holly took her little nap, I believe risk off was somewhere in the $4 and $5 range, and risk on was somewhere in the 20 some odd dollar range before we had the outage. So these numbers are going to be a little bit skewed until we get everything corrected. But fortunately for us, all of the entry prices on the trades that we're going to showcase were kept intact today. So, all right, Steve. I think I might have spoken a little too soon here.
Oh, here they come. They're refreshing, right?
Okay, for some reason when I was double-clicking there, I wasn't getting the top data. There, okay. All right, there we go. All right, so first and foremost, let's just talk about the 500-pound gorilla that was the SRPT trade today. So what we're doing here is we're just going to look at the 5-minute intraday, and of course, voila, you know, what we have about 5, 10, 15, 20, 25 minutes into the market is when Holly sent the signal to get long SRPT. The low of the candle was 28.57. As we can see here, 28.75 was the entry price that Holly called. And of course, we all know that this was going to be not in a slow market, right? So, you know, we can see as the high was penetrated right here. Let me just stretch this out a little bit here. So I'm going to have to squinch our eyes so much to see these bars here. All right. So, 5, 10, 15, 25 minutes in, Holly calls the signal, get long here. Now, of course, as we were talking about, it was going to be a fast market. But, of course, as with any Holly signal, it's all really predicated on how quickly you can pull up the signal, see what's happening, and make an informed decision. So, yes, it was a fast market, but the bottom line is this. Having Holly call this trade towards the lower end of this candle should have given people plenty of time to pull it up, see what's going on. And, Steve, what I found highly interesting about this whole SRPT trade today from the beginning is usually this type of information does not get disseminated during the market session.
During the day, yeah, and so that's why you had a halt.
Always a gap.
That's why you had the halt, and so if you weren't in before the halt, you weren't in. So, yeah, it had to be a quick decision.
Absolutely. So, one strange observation, usually that happens, the night before. And there's no opportunity to participate in a move like this. But today, there was definitely an opportunity to get a few shares there before they halted it. And if you were lucky enough to get a few shares on the books, then you had a nice decision to make. Do I peel out a half, peel out a some, hold the rest? But wow, what a trade. Definitely the biggest trade on a single stock, I think, that Holly's ever kicked out on an intraday basis. Hands down, hands down. So those of you that were, fast enough on the steal to get a piece, good job. Hopefully, maybe there'll be more of these in the future. Once again, very strange to have this, it's not like it was half the day was over before this news hit the tape. Very close after the open, which, is not how it's done usually, but hey, we'll take it. I wish everything was like that, to where we actually had the opportunity to participate and didn't have to, look at the gap ups and gap downs after the fact, going, man, that would have been nice had we could we have participated in it today. That opportunity definitely presented itself. So, of course, that's the biggest winner for today, biggest winner that Holly's kicked out on a single stock. So that definitely kicked us up into the upper end of that range for her profitability. Now, what other trades were there today, other than this, one that was definitely outside of the ordinary? And let's take a look at BRS. Shrink this chart back up a little bit here. All right, so BRS, shortly after the open as well, Holly gets a buy signal right here at 1186. And if I just come over here and kind of put a line across there for easy reference.
Yeah, that always makes it much easier.
Yeah, so first and foremost, 1186 is before we busted out of this little range here. And once again, this is something that always crops up in a lot of the Holly trader rounds, is that if we get the signal here and we're still, below lows here, then whether we participate and pop into 100, 200, 300 shares here just on Holly's statistically strong call, or whether we monitor it, that's fine. But then, as we can see, during this candle, we did penetrate highs. And, of course, these patterns get easier to identify the further away from the open that we get, so we can see some patterns here. But as far as a 15-minute opening range break, that's what sticks out, to me. So we have the Holly entry, and then, of course, shortly after that, a nice little simple pattern to give us the opportunity to increase that alpha, to get more out of this trade on a second entry. And then, of course, from that point on, it was just pretty much nonstop to the top. And then, what do we do, Steve, once this upward momentum stops?
Well,
what do we have to start thinking about?
Start thinking about taking some profits and dishing some out. But on the way up, there's something interesting happening there.
Okay.
You see what happened on the way up between the blue arrow and the top? You got an RBI. People always ask, what is RBI? Well, it's something Barry Einerson came up with, and it actually is a function of trade ideas. Go ahead and show them how they can launch an RBI real quick, Jamie.
Sure.
If you're a premium member, you've got to be a premium member. It's down there. It's called the premium member RBI and GBI. They're in 5-minute increments, and they're in 15-minute increments. Well, what this is a red bar ignored. RBI. You can count 4 green bars prior to the 5-minute red bar. That triggers it. And then if the subsequent bar after that red bar goes back to green, that is a very nice momentum indicator, continuation pattern recognition. So that is what an RBI would look like, just in case somebody out there was wondering, what the heck's a GBI and an RBI? Well, that's a great example, not only a great example, but it working as well. People thought that that red candle might pull it back in, but the sellers were wrong, and look at that. They accelerated out of that red candle. So once you get that nice acceleration, then it's like, that was a nice little run. I got to start thinking about selling when I can, not when I have to. It's like real estate, guys. You know, when it's a seller's market, you pop that flag out there and you start to get bids over your price. That's when you want to be selling. You don't want to be selling when half your block has their sign out. So just a little metaphor there.
No, that's great because, number one, Holly's calling the trade, statistically weighted. Number two, simple range break here. Number three, once we see this again, even better. You have three different confirmations that, yes, this indeed, could be a very, very good trade. Not just one, not two, but three different things here that once you get familiar with the suite of technology that we have, Holly, simple range break, red bar ignored. I mean, that is that's a triple knockout right there. And it's always good when we're in a trade and it's going our way and then we see another one of our favorite windows or the RBI or any other thing that we, have been tracking, confirm that. I mean, that really does give us confidence as traders. And, once we get up to this level, it's just, applying basic trade management so that you take something off, you risk a little bit, and then that's how the game is played. But even if that second half doesn't work out, you still locked in that profit on the first lot. All right, so BRS and SRPT. Let's see. I believe next on the list here, EXAS. And of course, we're going to see very similar things here, Steve. Birds of a feather and all that. So here we have the entry price. We'll just draw our line nice and straight across here. Of course, it's already put in its high. Puts in its bottoming wick here, which also gives us confidence that once we get the signal from Holly here, we can look back and go, you know what, they tried to snap it down, but as Steve would like to say, it was like a beach ball that you pulled up, you pulled down under the water and whoosh, back up. The sellers took control, but they couldn't maintain. It's nice butting up against what we see over here, from the prior day. So then Holly's like, okay, it's time to get along. I think I'll have me a piece of this. And then once again, whether we go ahead and pile into 100 or 200 here with Holly, then what happens right up here? Draw that second line across. Boom. So once again, Holly here. Later on as this unfolds, you probably hear Jamie in the background going, hey, range break, remember this? We need a member berry for that, Steve. And then we push through and go higher. And then look at who we have make a visit right here. Mr. Red Bar ignored. Same thing. So once again, Holly trade, statistically inclined to go our way. We have reasonable assurances that we could be right because we tried to go down. Holly calls it. We go. Range break. We go. Red bar ignored. We go. Or we start scaling out. But the bottom line is, two different signals before we even get up here. Once we're in it and we're going our way, I don't know a whole lot of traders that are peeling out, when we're having green, green, green. We have to wait for the pause, and then we make our decision. Of course, that pause, it all happens relatively quickly, but it's all about getting familiar with very simple patterns. And guess what, guys, ladies and gentlemen, it doesn't get much simpler than this. Now, Holly, we're already listening to her. But then when we see these additional patterns, fire off after she talks about it, range break, red bar ignored. It just doesn't get any simpler. And, Steve and I always like to say we're going to keep talking about what's working until it doesn't work anymore. And right now, these things continue to work. The simple chart patterns are very, simple. They're just simple. Our risk is always very recognizable, and that's really what trading is all about. A lot of people try to paint themselves into a corner get way too specific, and you know, really what we want to do is get a simple methodology down. You may hear us refer to this methodology as part of the Holly Trinity, but it's really just 3 simple pieces. First, we have to get the quality information, which is coming, in this case, from Holly. But it could be a top list or any other alert window that we've deemed worthy, right? We consult the footprints in the sand, which are the charts, and then we either take the trade, and if we want to monitor the trade and not take it immediately, well, then we pull over our good friend, the price alert window, and we can set those alerts right from our chart just by right-clicking and setting that price alert. All right, so one more guy to discuss here on the Holly trades. Let me just sort alphabetically here. Edit. All right. Now this one's interesting as well, and it just happened to coincide. Let's see here. This was our entry bar, 1471. Was the price right here? Now this one just happens to coincide with the initial range break, as we can see here. And the Holly price was 1471. We take a little bit of a pullback, as maybe 10 minutes after Holly calls it. Of course, we don't come anywhere close to our stop loss, which I'll just draw a line for easy reference. So, of course, here's our stop loss price. Throws a little wiggle, but doesn't do anything. Now, Steve, would you still consider this red bar ignored due to this this prior candle here?
Yeah, that's a tough one because that prior candle was higher. That's going to be basically 2 red candles, I believe.
Yep.
Even though there's no color there, that's a slight pullback. So that's 2 red pullbacks in a row.
Right. So what I'd say about this one is, hey, it's right on the range break, which is one of my favorite things to do. But just simply based on the fact, once you see the signal and you pull this up and you can identify, hey, statistically weighted, Holly's going to have her a piece of this one, and I just happen to notice it's already at the range break. Now, a good rule of thumb, Holly's always going to spit out what your stop loss is going to be, what her recommended stop loss. So in this case, we can see down here on the edit trade, she recommended a stop loss of 25 cents based on our smart stop technology, which is a great way to assess risk. From another standpoint, I always like to say on these types of plays, not including the entry bar, we look back 15 minutes and take the lower point. All right. So whether you did that or whether you took Holly's advice, throws a little bit of a wiggle, but never comes close to stopping us out. So just a nice smooth trade here on the edit after we set this little wiggle. We could treat it another way. We could say, okay, we were range bound right after this, and anytime Holly turns red, we can draw a line straight across from the entry point in case we want to try to make a second entry when that does occur. So once again, just whether we made a second entry on this one or not, eventually it caught its traction and went to the upper extremes, and at that point we just have to make our decision. How much do we want to get out of? How much do we want to risk or leave on the table for a flat or some type of trailing stop? So, even taking SRPT out of the equation today, between BRS, EXAS, and EDIT, if you just get familiar with reading these charts and reinserting the Holly buy prices and being able to identify some of these things like the red bar ignored and the range break, that will really allow you to leverage, and the price alerts, using those in conjunction with what you're seeing here. It's a simple methodology, but it's very powerful. And I'm sure those of you who are regular attenders of the webinar, webinars on Mondays and Wednesdays and Thursdays, are making use of this methodology. And for those of you who are new, then you're coming along at a very good time, because it's all about simplicity and the power within. All right, Steve.
All right, Jamie. Well, speaking of methodology, how did price alerts look for next week?
Yeah. Let's take a look here. Let me find my other. I seem to have lost my slide here, so give me 1 second. All right. So as We're going to talk about the limit alerts from last week, and once again, give me 1 second here. I managed to get my desktop a little crowded. Okay, so for those of you who were in attendance last Monday, Steve and I dropped these price alerts into the chat window for everybody. We had 4 of them. Only 2 of them triggered. Blue and PCI, of course. Blue, pull it up here on the chart. Of course, here's the daily. And here's where we called it right here in this area before this penetration occurred. And of
Can you
course,
zoom out a little bit and get the bigger picture?
yes, we can.
Because, yeah, there's the
There we
bigger
go.
picture. That's why it's called the trend change lubricant, and that's why we're looking for pivot levels on stocks that have high short floats. It's exactly what they say. What did our notes say? 40% short the float on this.
Mm-hmm.
So a really nice saucer bottom, long basing pattern, and then, as textbook as we want these days, once that trigger price has been triggered and the price moves beyond it, any short sellers that are losing here that are worth their salt realize they better maybe rethink that position. Pull up CVI real quick because, again, that's the trade of the week, and, looking kind of similar. You could even zoom in a little bit there on that one, all right? This CVI, I believe, has 50% short the float. And that trigger point that was identified today, CVI, 32% short the float, my bad. I had to double check that. But that was the trade of the week that was triggered today very early on the open, and it's now active. But this is the similar type of stuff that we're going to talk about. We have a few more to even look at the end of the hour today. But we're trying to keep it as simple as possible, and this is what's been seemingly working the best. As long as the market stays bid and buoyant, then the short sellers are on their heels. If we can find these technical patterns using Trade Ideas technology of stocks that are basing in the lower end of their 52-week range and then turning back up, it's our job as the traders to identify a pivot level and then mark up that pivot level with your trade alerts, with your price alerts. I mean, it's really that simple. If you want to just chase all the blinking lights and go from channel to channel, yeah, I can see how it can get distracting and you can probably get yourself spun around pretty quick. But the whole idea is to, find something that's working and stay with it and try and keep it as simple as possible. And for now, until it stops working, this trend change lubricant stuff is working. And again, I've got a couple more that we'll mark up at the end of the day here. But blue was, boy, that was textbook. And I believe that the blast off in a short amount of time, had to do with the amount of short float that was sitting on that one. Just to refresh my memory, the short float in blue was almost 40%. So that's a huge contingency. Not only that, it had 36 million, not a huge float, but not small either. So I just wanted to zoom out there so we could let everybody really see the bigger picture for those that maybe have joined late and wondered what we saw. What did you guys see there that made it run like that? Well, traded through a pivot point of a very long time, a lot of pent-up energy with a very high short float, and that's the trend change lubricant setup that we've just been trying to hammer out week after week.
Yes, and very powerful, and they just keep showing up and showing up and showing up. Sometimes they get thin, sometimes there's more than others, but all in all have proven to be, very valuable setups. All right, so blue was the big winner, 11 plus points, depending on, when you might have taken some profits. PCI, I still want to talk about this one, Steve, just because of the pattern that you were discussing with the washout bounce. Yep. Sometimes we catch them, sometimes they don't. This one is still up 9 cents, nothing to write home about, but it did trigger and is positive to the tune of 9 whole cents. But that's just the whole point is we never know which ones are going to go. So
how do the other two look that are still working? What do we got there? How far away are they?
Mm-hmm.
Okay, so that one...
That was a washout as well. Mm-hmm.
That was a washout bounce. It never triggered, so... that one's kind of changed. I actually delete that one because I fully expected the washout bounce the very next day, and it's taking all this time and energy to get back. So that one's probably defunct, no longer has the shape we want. And then what did pool look like?
Pool. washout.
Pool was long, also a washout that just never really went anywhere, but it hasn't really. Let's talk about this. I think, the area that you fish or cut bait on these things is when they start to trade down into that wick, and it did do that a couple days ago, but it's hanging out here. Again, this one, it didn't do what I expected. I'd probably cut both of those triggers and wouldn't even consider those at the moment. Washout bounces are a one-day event, and I really expect them the following day to snap into shape. And both of these washout bounces did not. They're just languishing, so I'd probably cut those, turn them off from working.
Right. And then once again, let's just talk to everybody a little bit about, okay, when they're seeing these setups and we set these price alerts, and then they get the live trigger in the live session. When we're talking about risk on these things, right? Can we go into detail a little bit about that when we're talking about, if one of these does trigger, do we look for the the little support areas down here as our stop loss, or do we go back a number of days, or is it just up to each individual?
That was in the form of a question to me?
Correct.
Where would I put my stop loss on this particular daily chart? Oh, I know what you're getting at. Okay, so we had a really nice move. 1, 2, 3, 4, 5 candles. Sell when you can, not when you have to. Now, what's up there at the top? We've been talking about the washout bounce. Well, this is the inverse of the washout bounce. This is the top out tail. And I think once you see a pattern or a candle that looks like that is running, that has shown up after 4 or 5 days, a really good run, be ready for a breather. Now, there's a nice big juicy gap down there. You could probably even make a case to throw in a pullback alert in the side of that juicy gap right there, because that's just the way stocks trade. They don't go in one direction. They go this way, then they go that way, and it's really up to us to try and time that jump rope, that very noisy jump rope we have. So if you flip that candle upside down, that chart upside down, that's the kind of thing that maybe you'd consider buying for a bounce with a bottoming tail, a washout bounce. So that's the exact opposite of a washout bounce, especially coming on the heels of 4 or 5 days of green candles. If you're still long this thing, don't get greedy, because if you want to hold it forever, that's great, but just be prepared. This thing might be ready to breathe for 2 or 3 days and take a little bit of a breath down into that gap area.
Very good, very cool. Thanks, Steve. Okay, so keeping with tradition, I'm going to, in essence, wash out my price alert window here. Now we're going to pull up some fresh charts and set some new alerts. Steve, well,
the first
any comments to make before we delve into the new ones?
No. I think I got it out of my system on that topping tail there on the blue chart. If you're gonna, you shouldn't be surprised to see a pattern like that give back a few days once you see that topping tail. So
absolutely,
that's what you're prepared for. Great. No surprise. So the first two we have, I don't have a whole lot. I've got a few, maybe 3 or 4. But the first one is going to be off the trend change lubricant, and it's a doozy. This is the one that is up, I believe, 55%, 55.8% AGIO, and it's coming off the trend change lubricant. So it's got, if you zoom out, it's got that that downward looking, beat up for the year. Perfect. All right, let's zoom back in.
Yeah.
And if we zoom in, we're starting to notice a fractal horseshoe. How about that, guys? A gap up, a failure to close the gap on the daily, and a movement back through highs. So we're going to set, this is my favorite one, this is my 5-star one for the week, 55% short the float with a horseshoe like that. If this thing triggers, I'd put a couple extra stars next to it because I really like it. 55% short the float, TCL.
Indeed.
Same strategy philosophy that we were just talking about on this other stuff. Blue and CVI, and let's just add this one to the mix. So we had another one today that I actually had a trigger, but it kind of might have been for a good thing. Let's just pull it up. It's AGIO. I did that one. It's OVAS. Look at how Jamie's so freaking on the ball. So what happened was that little congestion area today, I set an alert, and of course it triggered and popped. But where did it go? It went to an interesting level. Well, look left, like we always say, and what do you know? It ran right smack into the high end of that wick back there. So we kind of had a little teaser, a little front running today with a pulling out of that sideways action. I really liked the last week. Our last week there was really nice. The last week. So popping out of that congestion is a great start, but it still really does need to clear that last hurdle. So we're going to use that last hurdle as our secondary setup today. So whatever the high is plus a penny. Let's take a look on the short float again for this
767.
one. 32% short on 25 million. And by the way, the first one, AGIO, was 30 million, I believe, or 33 million. So I mean, these are small floats. These are not hundreds of millions. You know, these are stocks that might have a lot of locked up institutional insiders holding, and not too much on the float. But if you get a high short float percentage and the right trigger and the right environment, we want to know about it. Now we're not going to miss it because we got both those set up and working, and that's the strategy that's been delivering alpha for us lately. So we got to continue to go with what works and keep it simple. Okay, the washout bounce did not have hardly anything today, but barely qualifies as OSURE. Let's quickly verify, guys. What is it we need to verify on these washout bounces? Where did the washout occur? What time of day? Was it the open? It better be. So let's take a look at the open on the 5-minute chart, or the 15, whatever you got. Thank you. That's what we need to see. That's the footprints and the thumbprints of algorithms and HFT washing out the stops. So as long as we see that on the first 15 minutes, we are good to go. Back on the candle, on the daily, you know, it's trying to put in kind of a washout there after where everybody probably put their obvious stops all the way down to the gap that Jamie so easily identified. That's why I call it the washout bounce. The coast should be clear, and if the coast is clear, then if it takes out today's highs, it should drift higher. So we'll just go ahead and mark up today's highs as a washout bounce, and typically these back test really well for 3 or 4 days of just nice, gentle upward movement. If you want to stick around for longer than 3 or 4 days, it does not back test as well, because the market, the price action, I should say, is probably getting ready to set up once again to wash somebody else out. So, you know, this is the ions are in the air, the streets are wet, the smell, street fresh rain. You know, that's what I look at these particular candles as. The coast is clear, at least for a few days. Let's trust it. If it doesn't, sometimes they don't. Don't argue with it. Just cut it. All right. The last one we have is a short. We're going to throw a short in there. And most of the shorts that I had, you know, were on the bullish piece.
I'm sorry about that, Steve. I fat-fingered my layout, so just give me 1 second here.
This one is off the bullish piercing, and what has not been working are stocks that have been running up in a really nice uptrend and then trying to short, you know. But what I like about this one, when you pull up EZPM, you'll see on the daily that the candle is very similar. It's almost like an upside down washout bounce candle, and it's been coming off of, you know, a good 4 or 5 day run. But in the bigger scheme of things, the EZPM just feels like it doesn't want to come up, huh?
That's what it's feeling like.
It's EP. Try
wait. My dyslexia is preventing me.
There you go. So this is a stock that's in a downtrend, right? And if you want to be contrarian, look at that bounce. Go ahead and zoom back in. That's a really nice looking bounce right on that trend line. And this is the bearish piercing. So it had 4 or 5 days of really nice run, but it threw in a topping tail, which is the exact opposite of our washout bounce. So I really feel like if we can take out the lows on that, considering the bigger picture, of course, you know, if you're trying to chase stuff that's making, you know, new 70 and 100-day high, this thing just made, you know, a new higher low on a downwardly trending stock. It looks like a very safe short entry, and he tagged it short, which is good. He's giving it a couple notes. Topping tail found on, just call it the, what do we call it? The BP, bearish piercing.
Mm-hmm.
And that's all we really need to know. So if it triggers, we can know what our thoughts were when it came up. But that's the kind of imprint on that chart right there we talked about last week, fading the rips. All right, this is a downward trending stock. Had a nice push from everybody that was short there 10 days ago. They probably got washed out and stopped out. Just the exact opposite. Could be a safe entry for a re-entry for short to hold for a few days. So, yeah, these would be more swing trades. to the question that we're asking, and when they get their move, a swing trade in my book can just be a day and a half. Once it gets its move, if something starts really moving in your direction, 5, 6, 7, 8%, start peeling it off. You're getting your move. So in my book, a swing trade can be a day and a half sometimes, as long as that big move that I expected comes. But I might sit for 3 or 4 days before they do make their big move. It just depends. So, but yeah, these are not set up for scalps. But with that said, you guys do whatever you want. This is like Holly. This is what Jamie and I are doing here, just giving some ideas, just like Holly would generate some ideas. The idea value is in the content of the trigger of the generated price. Once the trade is open, it's really up to you guys. Everybody has different risk parameters. Everybody has different tolerances, different lives. You guys manage the trade. We can't take it from A to B every single time. But to answer your question, yes, these are for swing trades. But if they get their move, don't be shy about taking it. Don't get greedy.
Absolutely, and I just dropped that cloud link into the chat area. So for all of you guys out there who have the price alert functionality, you know what to do. Just drop that cloud link in. Those guys will appear for you, and then it's just watch and wait.
Mm-hmm. All right. Well, again, Wednesday is probably going to be a catalyst day for the market. Tomorrow is probably going to be another inside day, just kind of tracking the same back and forth we've had from the last few days. So Wednesday should be interesting. By the end of the day, you're going to have a lot of volatility, I'm thinking.
Yeah, so tomorrow, if it does get real slow after the first couple of hours, then you'll kind of know that it's just the calm before the storm leading up to the FOMC Big Wednesday.
Just got to keep that 212.50 level intact for the most part. It might tickle it, but if it closes below it, then all bets are off before Wednesday. I'd be surprised to see that. That'd be a lot of people placing bets technically before the actual event comes out. So I'm, again, fully expecting us to just stay in this little range here that we've been in.
Yep, and it will be here before we know it. All right, well, I think I've bestowed all my valuable information that I had stored up for today, Steve. Anything else to add before we let Scott talk to people about how they can take advantage of these coupon codes?
That was it. Just kind of pointing towards Wednesday.
All righty. Well, Scott, if you're ready for us, we're ready for you.
Sounds good. Thanks for today's office hours. To thank everyone for coming, and especially those of you who are not yet subscribers, we'd like to offer you an easy way to come on board with Trade Ideas. Just go to trade-ideas.com/price and use that promotional code, the office, all caps. Saves you a bunch. In fact, if you go to the handouts panel on your GoToWebinar interface and expand it, just click on the plus next to where it says handouts. You can download a PDF with this slide and also a slide with important contact info if you have any questions. So we have a standard and a premium. So the standard version of Trade Ideas has access to your real-time data. So it also includes the funds that cover your exchange fees with the markets, and also the charts, all the filters and alerts, all that good stuff. It also includes a full hour of one-on-one training and all of the support. However, the premium version is where the AI is, and the odds maker backtesting tool, and the price alerts, and the red bar ignore, green bar ignore. Lots of higher level functionality. And as you saw, if you were here at the very beginning when I gave out that poll, the majority of existing subscribers now that are attending our webinars already have access to premium. So it is something that people are opting to upgrade into after they try standard. So you could get directly into premium at $188 a month, less 15% by using that code. It's a great way to get started. And then you can just upgrade into the year as soon as you decide you want to stay with Trade Ideas. Or you can get in for as little as $99 a month, less 10%, because that code takes 15% off of your first month or year of premium, or 10% off your first month or year of standard. Both also include that hour of training. So considering that either at $188 to get in for your first month, less that discount, or $99 a month to get in at standard, both include a full hour of one-on-one training, and we have the trading room every day hosted by Barry Anderson, and we have multiple weekly webinars where questions and answers get taken care of, in addition to lots of informative trading content and educational information. This is really a bargain. There's no other service like this that you can get in at that kind of rate. So go ahead and take advantage of this code before it expires at the end of the month. It's The Office, all caps. Thanks, Jamie. Thanks, Steve. Oh, if you have any questions, just shoot us an email, info@trade-ideas.com, or you can contact Jamie at jhodge or Steve at steve@. Also, follow us on Twitter. Steve is Today Trader on Twitter. Jamie is QuantBot. Dan Merkin, our CEO, is Trade Ideas 1. We also have Trade Ideas and some other Twitter accounts, but those are great ones to follow. Facebook.com/Trade Ideas Pro is where we post things on Facebook. If you're on the Facebooks, you may as well just like us. You're going to see some stuff pop into your stream that we don't post anywhere else, if that's the case. And our phone number is a fantastic way to get in touch with us if you have any billing or subscription issues. And that's manned during normal business hours on the West Coast. All right, thanks, guys. Thanks, everyone. Keep an eye out in your inbox for invitations to the Wednesday webinars, and we have also got a special eSignal webinar tomorrow, which you may get invited to as well. If you're interested in using Trade Ideas with eSignal at all, you may want to attend that one as well. Also, thanks, guys.
Thanks, everybody.
Thank you. Bye-bye.
All righty, bye-bye.